Imagine an economy that's bigger than some actual countries. Now, imagine that entire economy getting rocked by one single decision from one single company. That is exactly what we're digging into today. We're going to break down what happened, why it's such a huge deal, and who really calls the shots in our digital worlds. Okay, so to really get a grip on just how big this is, you have to see this number. $5.8 billion. That's how much the market for in-game cosmetic items, or skins, was worth inside the game Counter-Strike 2. And look, we're not talking about some kind of monopoly money here. This was a massive real deal economy, all built around digital stuff. And then, boom, $2 billion, just gone, wiped out almost overnight. This wasn't just a little dip in the market. This was a full-blown crash. And the craziest part? It all happened because the company behind the game decided to change a single line of code. So what in the world happened here? I mean, how can a digital market that huge be so fragile? Well, that's what we're going to break down. We'll look at exactly what triggered the crash, the huge problem of control this whole thing exposes, and what it could mean for any digital stuff that you think you owned. All right, so here's the spark that lit the whole fire. For a long time, you could trade a bunch of common items for rarer ones. But then the developer, Valve, just changed the rules out of the blue. They basically created a new recipe where you could turn 5 common items into one that used to be hyper rare. Suddenly, these incredibly valuable knives and gloves weren't so rare anymore. The market was flooded. And you know basic economics, right? When supply goes through the roof, value just craters. Yeah, this whole thing is super dramatic, for sure. But that feeling of being completely powerless, that's not new at all. It really just shines a massive spotlight on the biggest problem with most of these digital worlds. One company, one single entity holds all the cards. They can change the rules whenever they want, and you just have to live with it. And this isn't some small problem, it's fundamental. In fact, this exact feeling is why Ethereum even exists. It's wild. The co-founder, Vitalik Buterin, he tells this story about playing World of Warcraft. The developers nerfed his favorite spell, basically made it useless. And he felt so powerless, the exact same way these CS2 players just did, that it literally sent him on a mission to build a new kind of system. A system where one person couldn't just pull the rug out from under you. So this really breaks it down into 2 totally different ways of thinking, right? You've got your centralized worlds on one hand. That's where a company like Valve is the king. The stuff you own is really just something they're letting you borrow. But then you have the idea of decentralized worlds. Here, the rules aren't hidden away. They're out in the open, written in code. It's like a public contract that one person can't just decide to tear up. Man, this quote just hits the nail on the head. All those valuable skins people poured real money into? Turns out they weren't assets at all. They were just a line of text in Valve's private spreadsheet, a spreadsheet they could edit whenever they felt like it. And boy, was this an expensive lesson for a lot of people. Okay, so if having one company in charge is the problem, what's the fix? Well, a lot of people in this space are pointing to that same technology we just talked about, the one Vitalik Buterin was inspired to create. They're saying the answer is blockchain. All right, let's do a super quick breakdown here. What is a blockchain? At its heart, it's basically a shared digital rulebook. The really important parts are, 1, it's transparent, everybody can see the rules, and 2, it's unchangeable. Once something's written in that book, nobody, not one single person, can go back and secretly erase it or change it. Now, this is where NFTs come in. And look, I know what you're probably thinking, overpriced digital art, right? Forget all that for a minute. In this world, an NFT is more like a digital title deed to your car or your house. It's a rock-solid, verifiable certificate that proves you and only you own that specific thing. It's not just a note in Valve's little database, it's actual proof of ownership that belongs to you. And the last piece of the puzzle is the smart contract. You can think of these as the robot lawyers of the blockchain. There are little programs that live on that rulebook and just automatically enforce the rules, no questions asked. So a smart contract could be programmed to say, there will only ever be 100 of this sword, period. And the developer can't just swoop in and change its mind later. So it sounds easy enough, right? Just turn all the items into NFTs and problem solved. Well, not so fast. Like pretty much everything, it's a bit more complicated than that. So let's get right to it. If all those CS2 skins had been NFTs, would the market have been safe? Would this $2 billion crash have even happened? And the answer from people who really know their stuff, like Martin Kupka, is a big, fat no. And when you think about it, it makes sense. I mean, who cares if you have an NFT that says you own the world's most powerful sword if the game developer can just push an update that makes that sword as useful as a wet noodle? Owning the item doesn't matter if someone else controls the entire universe it's supposed to work in. Which brings us to this much bigger, kind of radical idea: fully on-chain games. And this isn't just about the items anymore. We're talking about putting the entire game on the blockchain. The core rules, how much damage a weapon does, how high you can jump, the digital physics of the world. All of it gets locked into those smart contracts. That way, once the game is out there, not even the people who made it can just decide to change the laws of gravity. So you see, this whole $2 billion fiasco has really thrown gasoline on this huge debate about what ownership even means in our digital lives. And believe me, this conversation is way, way bigger than just one video game. And this quote really clears things up. Blockchain isn't some magic pill that stops markets from being volatile. Prices will always go up and down. That's just how markets work. The real point, as Katie Romero Finger says, is that it changes who gets to set the rules. It shifts the power from one company making secret decisions to a set of rules that are out in the open for everyone to see. Ultimately, this whole thing boils down to a few key choices. Are we okay with centralized control, or do we prefer code as law? Do we want to play in a company store where they can change the price tags whenever they want, or a real, genuine economy? Is borrowed trust in a corporation enough, or do we need provable ownership? And finally, the big one, rules that can change at any moment, or an unchangeable set of digital physics. And maybe this is the real takeaway here. When these game economies start rivaling the economies of actual countries, we have to start treating them differently. It's like Joanna Barra says, things like transparency and rules that don't change overnight, maybe those aren't just tech buzzwords anymore. Maybe they're just basic consumer rights for our digital lives. And that leaves us with one last massive question to think about. Because this really isn't just about video games, is it? As more of our money, our friendships, our lives move online, we all have to decide who gets to write the rules. A company making decisions behind closed doors, or transparent code that we can all see and agree on? It's a question we're all going to have to answer, probably a lot sooner than we think.